Jane Street versus Millennium. So hello everyone. So this video is about these high frequency traders. Now it's a very hot topic these days, but we or I have been telling you these high frequency traders and about catching them during the live market hours for the past 2 years. Those who don't believe, you don't have to believe. So just go to Twitter. So you can just give my name on my profile name and just search HFT after that. Okay, so you will see that there are many posts. Okay, even there has been many posts where I did not exactly write the word HFT, but even in the videos also, if you go and look at the videos which I post my daily analysis, there also I every day say that these HFT guys which I catch them during the intraday. So I have developed some algo for with the help of which I am able to catch these big HFT trading platforms where they are like taking these option buying trades specially. Okay, so let's come one by one the points. So many people ask me like how do you figure out these option buyers, how do you figure out that these HFT traders are active or not. So even like if you come and see today, so today also they were present in this Nifty. Okay, and we got a very nice reversal. So now the main point is data. Okay, so you have to get hold of some data through which you will be able to predict them. So the very first thing, let me tell you something, that is those who ask me like how do you catch these or tell us this secret. Okay, so it's not about something that you see this indicator, look at that data, look at IVs increasing or not, and you say so. It's nothing like a theorem remember in school you used to learn theorems in mathematics, okay, or in sometimes in physics also. So the point being here is theorems are like statements which are always valid. Okay, so in stock market we don't have theorems, so nothing works all the time. You have to keep this in mind. So it's all about probability. So when probability comes, so then machine learning comes. Okay, so machine learning is important, AI is important here. So it's not like you sit in front of the screen and you just catch these HFT traders. Okay, so you need algos to catch algos. Okay, so so algos are doing what? They are like not only they are specifically doing something with a particular data or something. Okay, so they are calculating huge data sets and they are taking trades based on that. So if you want to catch them, so your human mind won't be enough for catching them. So the thing is that you have to get hold of algos to catch algos. So that's the very basic point. Now let's come to the main point, the data. So the data that you see, the main thing is that OI orders comes every 3 minutes. Okay, so OI, if you are waiting for the OI data, so it gets updated every 3 minutes. But you have sometimes seen that we have just caught the reversal while market was going up and we shorted and just the next candle market fell. Okay, so it happened like in a span of let's say 2 or 3 minutes. Just let me give you an example, just today. Okay, so just today if you just go and check, the first time we bought puts, means I bought puts and updated. So if you look at the time, so I posted it at 2:04 p.m. Okay, the move came exactly, just go and check the 1 minute chart, the move came at 2:09. Okay, so it took like 5 minutes or less than 5 minutes to give the move. So sometimes it also takes less than even 3 minutes to get the move. So you can't rely upon exactly the OI data. But yes, of course OI data is very very helpful, let me tell you that. But now let's come to the main data, that is the order. Okay, so you have to first notice that whether a huge order is getting placed or not. Now the second thing is that those orders are getting executed or not. So let me give you an example. Sometimes you might have like given suppose you want to buy some calls, you want to buy it at 40, the price is at almost like it's coming down to 41 40.5, but not 40 exactly. Okay, So why this thing happens? And then when you increase it to 40.5, it's not coming down below 41 or something. Okay, so why these things happen? So try to understand. All these people, those who are trading, they're placing orders in the exchange. Okay, and then this order book, so this is an open data. Okay, so this data is being distributed to those who are buying this data. Okay, now you and me, we cannot buy this data. So again, this data is huge. Okay, it's huge means it's huge. So I mean, in real time, the data cannot be processed even through internet as well. So what you have to do is you have to set up your system in house. Okay, what I mean is that inside the NSE building, you have to set up your system, and through local, so your computer has to be in their local network, and from there you can get this hold of this ordered book. Okay, and there you can know that if a sudden, like if this HFT, so why the name HFT? Because its full form is high frequency trading. So within a small even within seconds also, they place huge amount of trades. So now try to know why, or if they're placing, so the counter also has to happen. Like if they are buying, then the sellers also have to be present. So now try to understand that when you get the order book, you know, when you can see the order book and analyze it, you know that on which side the demand is, or where exactly the demand is, or where people want to buy, where people want to sell. So that is very important. Now yes, now the one that example I gave you, so there also many people, what they do is with the help of their algos, so these are institutions. Okay, so they get their system there, and with the help of algos, they do this thing, that is they create the demand at one place. Okay, and then they take the trades against them. So that's how it's being done. Now try to understand that first of all, you have to get hold of this data. So again, you can contact some institution who can provide you the data, but again you have to pay them as well. But to set up your system, it requires, like, let's say at least 30 to 40 lakhs, not less than that, to get the data. And after that also, like to set up the system, I think you need 20 to 25 lakhs, and again there are many other expenses, so that's why I said 40 lakhs. Okay, but then again you have to have you have to build algos to handle those data. So there are a lot of things. Okay, so now the thing is that you can if some prop decks have their system, you can contact the prop decks and say that I need only Nifty, Bank Nifty, Fin Nifty data of this order book, can you provide it to me, how much will you charge? So that you can do. Okay, but I won't name any broker or anyone who can do that. So now let's come to the main point, that is that data is important. But again there are you will see that there are platforms where you can get those order books, and you see that, oh, so this is where the orders are being placed, but it always doesn't work, right? So that is not the sufficient thing to conclude that buyers are present, or some like HFT traders are present. So again you have to go, you got the data that huge orders have been placed. Now you have to analyze, are those sellers or buyers? Okay, so now the thing is that, like, yes, you can see that in the order book they are sellers, but the next question comes is that, are those sellers and also the buyers, now which one is retail traders, which one is HFT? So that you have to analyze. So that's where the research comes in. Okay, you will get it, like even in your terminal also, you get the market depth 5. Okay, market depth, so where you get that on which side the demand is more, selling or buying. So that's what I'm talking about. Okay, so if the whole data is shown to you, so that's the order book. So you will get, like, on which side the demand is, and on which side suddenly some order has been placed. But further you have to analyze that whether those orders are like exactly like some big guys, or it's like I mean, it's just any retail traders or some clients, they are placing those orders, or what is this what is the other data point saying. Okay, so now for that also you have to come to option chain. So there are many variables in option chain which people don't like neglect. Okay, like the volume data. I have seen that 90% of the people don't even care about what the volume is. So let me give you an example. These hedge funds, they not only like, it's not like they always buy. Okay, now especially on the expiry days they buy. Why? Because let me tell you that like especially on the expiry days, the volume, the traders, like I have mentioned this even in the past as well, that everyone thinks that we are very clever and we'll just like go and short at the places where the open OI is much more, like it's very high, and we'll sell and eat premiums. And also you know that on expiry days, like if you sell some option at let's say 50 rupees or let's say 30 rupees, so you go 50 or 100 points above and you buy hedges for 1 rupee, so you get like almost you can sell for 30,000 to 35,000, sometimes even 25k as well. So now people started doing this. Okay, and then what happens is that these HFT traders saw this huge opportunity and took the benefit of it. So now you should you know that like buyer has I mean, if you are against a seller and you win, so I mean, being a buyer you have unlimited profit. Okay, so that's what the theory is saying. So now that's what they did. So especially on the expiry days, they are hitting the sides on which the put OI or the call OI is the highest, like especially those strike prices. If you have noticed it, you will notice sometimes in the morning that put side huge OI, so suddenly you will see that market fell. We noticed this many times. Okay, and we caught the reversal as well, though the put side OI was more than the call side OI, but still market fell. Okay, now what happens? Try to understand. Market is going up. Okay, and put side writers demand increases. Okay, so now market is going up and up. Fine, writers demand increases, and now these HFT traders, what they do is they see that huge demand of put writers. Okay, so they see this opportunity of going against them, and then they go against them and take the positions, and like they go very fast. Okay, so it's a high frequency trading, that's why the name. So they go very fast and take trades against them, and then they might be selling in cash, or they might be knowing something that we don't know, and they take the market in their direction. Okay, so that's why you have seen that many times I catch these reversals. If you just go and check my YouTube channel where I post this, or Twitter account, so you'll see that most of the times, even today as well, we caught a very perfect reversal. Okay, just from the top. Okay, why it happens? Try to understand that. You have to, like, when it's moving up, so reversals means what? It's moving up and it falls, right? So you caught at the top, the reversal, or it's going down and it went up. So now try to think, why does this reversal works when just at the top? The best it works at the top or near about the top. So why? The same explanation, that it goes up and then you have to, like, I mean, the put side writers demand increases automatically. Like these prop decks, these institutions, they have algos. Okay, so they create this demand of put writing, and then these HFT traders, hedge funds, the big hedge funds, they saw this opportunity and then they went against them, and they take the market down or they take the market up, and thus we get to capture the reversals. Okay, just at the perfect top. So that's the idea. So if you have to, like, catch these guys. Now again, if you tell me that what are exactly the data points that you see, I told you a major hint, that is the order book. Okay, now you see the order book. Okay, sellers are present and these buyers are also present, but will the market move I mean as per them, or are they big guys, or even if they are big guys, how big are they, or what could be the impact of this much of orders. So all these have to be machine learned. Okay, so it's not like it's not like you sit and you decide. Okay, so all these have to be machine learned. And also there are like other data points, as I told you, that for example volume, you don't see volume. Now let me explain that these hedge funds, they also sell. Okay, now suppose they have sold puts. So they have sold puts, but now they think that okay, we'll take the market down. So what they will do is they will start closing their put writing, and then they will start they will start making put buying. So what happens is that suppose I am a big hedge fund, so I close my put writing, I close one of my put writing, okay, and one lot put writing, and I buy one lot. So ultimately what will happen is that my OI, the open OI, open interest will not change, okay, but the volume will change. The volume is always increasing. So now you have to notice this pattern, that is the volume is increasing by huge quantity, but the OI is not, or either the OI is almost constant or it's not moving. Okay, so it's not like exactly the OI will be same, some difference will be there, but you will have to notice it. Okay, whether the sometimes even clearly you will be able to see that OI is decreasing, volume is going up. Okay, so that is fine. But when OI remains almost same or little bit of increase, but the volume goes up by much, then you know that this exchange is happening. Okay, so that's how you can take the advantage of volume. Now let's come to another point, IV, which no one notices. IV tells you the probability, it tells you that how much is the probability. Yes, of course it tells you that it doesn't tell you that it will go down or up. So it tells you the probability that the option, the premium or the strike, what's the probability that it will go in the money, or how much is the probability that the price will increase. Okay, so now it's not only says that it increases, but suppose the probability is 20%. Okay, so the probability is 20% means the price can increase 20% as well as the price can decrease 20%. Okay, but usually what happens is that you have to again machine learn these things, that whenever these data points are coming, these orders are coming, what is happening to the IV, you have to check. Okay, and thus you can go ahead and how the volume is working, how the premium is working. Okay, so like this you have to use all these variables and finally come up with the conclusion, and that conclusion you cannot take with your brain. You have to use algos, because those datas, again let me tell you that if you take data from NSE, no way. Okay, so you can't catch these HFT traders, because NSE data gets updated at 3 minutes interval. So again you have to get hold of some data from these brokers. Again, even if you take Zerodha Kite, okay, API, so you get data for tick for 1 second. Okay, but if you want to catch these HFT traders, then you have to go microsecond. Basically you have to go microsecond. So even sometimes you will notice that within 1 second they push a lot of orders. Okay, so if you go microsecond, then that can help you more. So that's how everything works. So it's not that easy to catch these guys. First of all, you have to get the order book, which is not like, if you don't have, you can't. Okay, so stop there. Okay, whatever you are doing, so just continue. If your system works, it works. Otherwise you have to leave it and find something else. Okay, so these are the main points I have discussed. And yeah, so again the main point being here is that they go especially on the expiry days, why they go against the sellers. First point is that they see that on which side the demand is more, and they go against them. And again, why they go against the seller, because buyers have unlimited profit potential. And also again these guys why they are like they also take trades on non-expiry days as well. So it's not like on the expiry days they take, but mostly they take on the expiry days because the premiums are very very small, and if you create huge demand, so you can easily spike up the premium. Okay, so that's how you get these injections, and that's how this all these things are happening, and these HFT traders are almost winning with probability 1. Almost, they also go wrong again. So let me tell you that like sometimes even if you go past 2 weeks, where just before this, like when Nifty started falling from 22,600, from there when Nifty started falling, it fell to 21,840. So they take also positional trades. So that was I clearly remember that was Wednesday. Both Nifty and Bank Nifty, they had just 2 weeks before, both Nifty and Bank Nifty had expiry on Wednesday, and I told that put buyers are active. Okay, these HFT traders, they are buying puts, but that day fall did not come, and from the next day onwards continuous falling, and it fell till Nifty fell till 21,850. So again, it's not like if you catch them, the I mean the fall will come on that day. Again, if you catch them, they are always profitable. That's not the case. But if you catch them 10 out of 8 out of 10 times, you will surely be in the right direction. Okay, as I have also shown you, by posting daily my trades and what my analysis are saying about these HFT traders. Okay, so I hope I have covered everything, all the points, and if you want to know about these James trade, so these are the links I'll post, I'll share in the description below, where you can go and check. And also this Jane Street and Millennium, so they are not the only hedge funds. Even in London and New York, there are many hedge funds, and even in Mauritius also. So they trade in the Indian stock market, and they take these trades almost every day. Okay, so someone or the other is active almost every day. If you can catch them, you get a very very nice profit. Okay, so again let me tell you that one more point I forgot, that is these when these HFT traders, they take their positions, it's not like they always go 2x or 3x or 10x. Okay, sometimes yes, it happens, well and good, but again out of let's say out of 10 times, 4 times or maximum 5 times, yes, they get 2x. But again, you won't be able to stay with them, because they know what they can do. They know how much power they have. They can sell a huge in the cash and take the market down or take the market up in the direction. They know everything. So you can't stay with them, but at least they take 10 to 15% profit in every trade. That I have seen, or that I have shown in every trades that I have caught them, and I have posted the trades on Twitter. So the thing is that if you can follow them. Okay, and also sometimes they average as well. So it's not like suppose they bought at 100, now the market did not move up, market went to 80, they will be again buying at 81, 82. Okay, and then you see suddenly market shooting up, and the price went to 150. So the thing is that you have to catch these guys, and there are two options. You can stay with them, or if you don't get the move, you set up a stop loss, like 15% stop loss, and you get out. Okay, so again, if you see them buying, you go with them, and you get your trade. Okay, so that's the thing. And even after 15 to 20%, you can trail your profits. So the thing is that again, catching these guys, it's not very easy. I've been doing this for the past 2 years openly on Twitter, and I have shared my analysis, and I have been sharing my analysis even during the live market hours, and I have proved myself over the years. So it's not like people are talking now and I'm making this video now. So it's nothing like that. I'm making this video because it's me only who was talking about. I have seen no other Twitter account or someone who was catching these big guys during the intraday, especially. Okay, so that's what I saw, and that's what I kept posting, and all my followers or whatever I have grown, so it's organically. Okay, so I haven't like made any paid like advertisement or done something. So it's all like on Twitter I have grown organically, and that's how I have been able to grow, by catching these guys and showing it to you live during the market hours. Okay, so that was all about my catching these HFT traders and about them. So if you found this information helpful, so please do share it among the other traders, and yes, thanks for watching, and keep watching and keep learning, and trade safely. See you in the next one.